In this lecture, we are going to learn concept of working capital management. First, let us understand what is working capital. It is money required for running your day-to-day business. See, if you are going to do business, you will have to purchase land, but it is not a working capital requirement. That is not required for to do your day-to-day business. It is a long-term requirement. You will purchase a building. That is also not a working capital requirement. But you will have to pay to raw material supplier for raw material. You will have to pay salary even if you have not sold any goods. You will have to pay for manufacturing. You will have to carry your debtors. You will have to carry some cash into your business. This all requirement for running your day-to-day business is nothing but working capital. And as the name suggests, try to understand money for working of your business. So what are your working capital? Number one is raw material stock. Why people keep raw material stock? So that whenever they are manufacturing the goods, there is readily stock available. So they will keep raw material stock. To keep that raw material stock, you will have to purchase that raw material stock. And so money will be required to purchase that raw material to keep it in stock. Raw material stock, same way WIP stock, same way finished good stock. Try to understand. So stock is one of your working capital. Debtors is also one of your working capital. Cash. Say if you are doing a business, you will have to keep some cash with you. If you are running a provision store, if you are running a mall, for giving change to customer, you will have to keep some cash balance. For emergency, you will have to keep some cash balance. If you are permanently keeping say 10,000 rupees cash, that 10,000 is stuck as a working capital into your business. This is nothing but your working capital. And if you will see closely, working capital deals with current assets, right? And also creditors, you will be paying late. Outstanding expenditure, you will be paying late. So it will reduce your working capital requirement because you are paying late. So practically working capital management is management of your current assets and your current liabilities. So what we are going to learn is management of stock, management of debtors, management of cash and bank, management of creditors, management of outstanding expenses. This all management is nothing but working capital management. Sir, what to manage in this? Say if we sell the goods on credit, there will be debtors, right? So what is the management portion in it? Should we give credit of 10 days? Should we give credit of 15 days? Should we give credit of 40 days? What should be the credit? That is one of the decision in working capital management, and there will be n numbers of decisions in working capital management. Please understand, in any business, money will be required for this purchasing raw material, payment of electricity bill, selling goods on credit, and money will be required for this particular working capital. So let us try to quantify it. How much money will be required for the working capital in a particular business, which is say a business of XYZ company, which is a manufacturing unit. What this company is manufacturing, say this type of pen. what will be working capital requirement of this XYZ company manufacturing pen. So what we are learning is how to find out working capital requirement. These are first category of questions. What are working capital requirement? So understand, let us understand to start the business. We are starting this manufacturing business. What you will do first, you will purchase land. Is it a working capital requirement? No. Then you will construct a building. Is it a working capital requirement? The answer is no. Then you will purchase raw materials. Now the working capital requirement starts. Try to understand first. Is nothing but raw materials. So the question arises is, how much is working capital requirement for purchasing raw material? Say, let me tell you, in a year, I purchase 12,000 units of raw material for this pen, which is costing rupees 1,20,000 rupees. So per unit, my raw material cost is 10 rupees. So my working capital requirement, see, this is where students don't understand it. They try to mug up the things and then they are confused when the question is asked. So my working capital requirement is rupees 1,20,000 in terms of money, because this is raw material which I am purchasing per annum. The answer is no. Try to understand, you will have to study, you will have to see how much stock is on an average lying in your godown. How much is average stock of raw material? See, there are companies where average stock of raw material is only for 1 day, only for 2 days, only for 3 days. But let us assume once we purchase this raw material will be in stock for the period of 1 month. So practically, your raw material stock is for 1 month in your godown. How much in the terms of units? Try to understand. If 12,000 units is a requirement for 12 months, how many units will be requirement for 1 month? This is how we find out. So 12,000 units multiplied by 1 divided by 12. So 1,000 units will be my raw material purchase per annum. No, raw material stock, which is an average stock. 1,000 units. If someone asks me this, what is your raw material stock? I can answer in 2 manners. My raw material average stock is 1,000 units, or my average raw material stock is 1 month. Both is same thing. 1,000 units or 1 month is one and the same thing as far as this question is concerned. Now, I will have to purchase today 1,000 units because I want to keep a stock of 1,000 units. So I will have to purchase this 1,000 units at a cost of 10 rupees, which is rupees 10,000. Sir, what is rupees 10,000? Believe me, it is raw material average stock. Same thing, but in rupees. It is same as this. This is in units. This is in rupees. We have just multiplied rupees. So three ways of saying what is my raw material stock. Unit 1000, rupees 10,000 or 1 month. All are correct answer. What is your raw material stock? Is 1000 units or 10,000 rupees or 1 month requirement, or for the period of 1 month the raw material is in your stock. This all are different ways of saying what is my raw material stock. And understand, on an average, I want to every time keep a stock of 1000 units in my godown. So assume this is my godown. I want to keep a stock worth rupees 10,000 or 1000 units. Every time, at any point of time, I want a stock of average 1000 units or 10,000 rupees. I am starting my manufacturing business. I will purchase this 1000 units of raw material for my stock. I will expend 10,000 rupees. So I will require rupees 10,000 for raw material. And here comes a very important point, concentrate. I want this rupees 10,000 for a period of 1 month. Initially agreed, understand, but conceptually you need to understand. This requirement is not for 1 month. What you will do after 1 month? You will stop your manufacturing? You will stop everything and sell your business? No, you are not going to do this after 1 month. After 1 month, you will again purchase this raw material. So, you will again require a raw material of 1000 units or rupees 10,000. See, I first understood, said this requirement is for 1 month. After 1 month, the same situation is arising, that I will again require rupees 10,000 raw material. I have recovered all my money. Now I again require 10,000 rupees. What will again happen after 1 month? Same thing. Again happen after 1 month. Same thing. So this is not for a period of 1 month. Believe me, this raw material requirement is forever. Till the time your business runs. We have done this even in capital budgeting. Sir, working capital is a cash outflow today, and it is a cash inflow at the end of the period. So when you close your business, there will be cash inflow. Otherwise, this money is going to remain in the business. This 10,000 rupees is going to remain in the business. So if someone says, you want a loan, I'll give it to you for 1 year, but I'll again extend it. What is the loan requirement to carry your raw material? I will say I will require rupees 10,000 to carry my raw material. Sir, not rupees 1,20,000. No, I will not require 1,20,000 rupees. Why? I am having 1,20,000 rupees requirement per annum, and I don't store my stock for 1 year. I store my stock only for 1 month. So if 1,20,000 rupees is per annum requirement, what is 1 month requirement is 10,000. Again, this raw material will be converted into WIP. Again, I will require raw material worth rupees 10,000 for the period of 1 month, and this will go in cycle. And this also we are going to learn working capital cycle in the same example itself. But right now concentrate. If someone tells you how much money will be required to carry your raw material, or in other words, what is your raw material working capital requirement in terms of money? See how I have found out. 12,000 units is a requirement per annum. I found out what is my raw material stock 1 month divided by 12, because 12,000 units is per annum. I will be getting stock of raw material, average stock of raw. Sir, then 12,000 units is not an average stock of raw material? No. It is a total annual requirement. Into 1 divided by 12 is nothing but average stock of raw material multiplied by price of raw material. That is rupees 10 over here. And I got answer of rupees 10,000. Let me convert it into formula. What is 12,000 units? It is nothing but raw material annual requirement, of course in units, multiplied by, what is 1 over here? Average stock of raw material. What is 12 over here? Total period. Why I am writing total? Try to understand. Sometimes raw material stock will be for 45 days. Then you will have to do 45 divided by 365, not divided by 12. If you are taking numerator in days, you should take denominator in days. Here we are taking numerator in months, so we will be taking denominator in months. Multiplied by, what is rupees 10? It is cost per unit of raw material. I will be getting raw material working capital requirement. Sir, who needs to take out this money? You can borrow the loan. You can take out your own money. You can bring in your equity capital to finance this working capital. But for raw material total requirement, this is how we find out the answer. Sir, we need to mug up the formula. The answer is yes, but do it logically every time so that you get an idea what actually you are doing. See, sometimes what happens is students are confused. This is given. Rupees 1,20,000 is raw material consumption per annum. So what is given? This multiplied by this is already given. The answer is given in rupees. You can easily find out the answer. Multiplied by 1 divided by 12. Alright. So logically, if the concept is clear, it will be better. Also, what is this multiplied by this? It is average stock of raw material in units. Multiplied by cost price per unit, we get working capital requirement. What is this? Believe me, it is nothing but average stock of raw material but in rupees. Right, we have just multiplied by cost price per unit. All right, let me go to my Excel sheet and feed this particular data. My raw material requirement is 10,000 rupees. How many months is my raw material? It is 1 month. Let me again go my PPT and let us go ahead. We have purchased the raw material and kept it for 1 month. Do you think now this 10,000 rupees will be coming back to me? No, still the raw material will go into WIP. So what is the process? Try to understand. Raw material is still going into WIP. All right. How much of your rupees 10,000 is realized? Nothing. Still the manufacturing process is going on. So only try to understand. First they are asking us how much money will be required in this process. You will have to have workers working on it. You will have to put electricity in it to convert it into finished product. These all are technically termed as overheads. There will be other overheads which will be put in your raw materials, right? First, I need to also understand what will be my WIP time period. What will be my work in progress time period? Work in progress time period will be 2 months. So, my raw material will go into processing, will take 2 months to manufacture, and after 2 months it will be converted into finished goods. Try to understand, please understand, I am talking per annum right now. What is my raw material requirement per annum? 1,20,000 rupees. This we all know, right? How much will be electricity cost? Sir, per month for 2 months or for 12 months? For 12 months. Electricity cost will be 36,000 rupees. It is per annum. I am not talking about per month. Those all figures are per annum. What will be workers' wages who are working on the manufacturing process? Is 24,000 rupees. What are other overheads? 60,000 rupees. This all are per annum. I am not saying they are per month. They are per annum. What is the total cost of manufacturing this product? What is the total cost of manufacturing this product as far as this all are concerned? 1,20,000 plus 36 plus 24 is 1. This is 60. 120. Total will be 2,40,000 rupees. Please understand, this is my per annum requirement. This is my per annum requirement. How to convert it into 2 months requirement? Very easy. Rupees 2,40,000 is for 12 months. Then what will be 2 months cost? What will be 2 months cost? Will be 2,40,000 into 2 divided by 12, which will be 40,000. All right. This is nothing but requirement of working capital for carrying out my process. Sir, why we have taken 36,000? We are not going to have a requirement of 36,000. Why? 36,000 is per annum, and our WIP is going to remain only by 2 months. Believe me, we have done into 2 divided by 12 over here. We have done into 2 divided by 12 over here, into 2 divided by 12, and into 2 divided by 12. So we have taken 2 divided by 12 common and directly did with this total 1,20,000 plus 36 plus 24 plus 60, that is 2,40,000. So we have taken this as common and then we have summed up and we got the requirement of 40,000. There is always this question in students' mind, and let me clear it. Sir, we have already considered raw materials requirement. over here we have already considered it. Why we are considering it again? We are practically doing 1,20,000 into 2 divided by 12. Agreed? Why? We have done total into 2 divided by 12. So practically we are doing individual items into 2 divided by 12. We have already taken this in raw material requirement. Why we are again taking it in WIP? Let me ask you. Any student who want to give the answer? Why we are again calculating requirement for raw material? Alright, let me clarify. Raw material was purchased. Cash outflow was kept in the godown for 1 month. After 1 month, will there be a cash inflow? The answer is no. Now this raw material will be converted into WIP. So have I got this money back? No. So this 1,20,000 will still remain stuck for 2 months into 2 divided by 12, which is 20,000 rupees requirement. So again there will be, because of this raw material, again it will be 20,000 rupees additional requirement. The problem is this, that sir, why we don't take this? This is 20,000. Sir, we have not found out 20,000 anywhere. Believe me, it is included in this 40,000. Why we don't term it as an additional raw material requirement? Because it is not a raw material requirement. It is not for the purpose of carrying raw material. It is for the purpose of carrying WIP. See, when you will go into the factory, this raw material will not be raw material. It will be work in progress. There might be some process done on it. So it is no longer a raw material. And so it is because of raw material, but the name of requirement is a WIP requirement. Believe me, out of this 40,000, 20,000 requirement is just because you are carrying again raw material. You are not getting your money back. So this will be total cost of WIP. Let me again summarize WIP requirement. How we did? Total cost of manufacturing, including raw material cost. We should consider raw material, I have just explained you, was 2,40,000 into WIP stock period. In our case, it was 2. Divided by total period. In our case, it was 12. This total cost will be in rupees terms. I will be getting 40,000 rupees, and this is how I find out WIP working capital requirement. What will be money required to carry on my day-to-day manufacturing, not a storing of raw material, but day-to-day manufacturing is rupees 40,000. We can divide even this total cost of manufacturing including raw material. Please understand how much raw materials were input. They are 12,000 units, right? So this is practically cost of 12,000 units. The pen will be in numbers 12,000 units only. It will not change. So 12,000 units is cost, total cost is 2,40,000. So 2,40,000 divided by 12,000 will be rupees 20. What is rupees 20? I'll tell you. Rupees 20 is total cost per unit or factory cost per unit. For 1 unit to manufacture, 10 rupees is raw material. Other 10 rupees will be incurred per unit. You can find out. This is 3 rupees. This is 2 rupees. And this is 5 rupees. So other 10 rupees. And this was originally 10. So 10 plus 10 totally will be 20. So to manufacture your product, your total cost is 20 rupees. And so 20 rupees is nothing but factory cost per unit. Right. So how we can find out this? That is also, this is for 20. 10,000 units into 20. This is also 10,000 units into 20 multiplied by 2 divided by 12. So we can also do this. Average stock of WIP, which is this, multiplied by factory cost per unit, which is 20, into WIP period divided by total period is also WIP working capital requirement. Try to understand the time sequence. I needed to purchase raw material not for full year but for 1 month. It will cost me rupees 10,000. So cash money will be required of 10,000. I will have to carry my manufacturing process. I will require 40,000 more. Sir, one time? No. This I am not going to do it one time. I am going to do it infinite period of time. So this will be requirement forever. This 10,000 rupees will never come out of my business except I close my business. This 40,000 rupees will never come out of my business till the time I close my business. So this will be requirement forever, which is 40,000, and all of you should understand in this rupees 40,000, the cost of raw material even is included because I have not got my money back of raw materials. Again, what is manufactured? My finished goods. Now that 2 months period is over. What is my WIP requirement? 40,000 rupees. How many months my WIP will work? 2 months. Please understand. Now my goods are manufactured and it will be immediately sold. The answer is no. It will remain in stock for some period. We are talking about finished goods. We are talking about finished goods. How much raw material is required? I am again talking about rupees. It is 1,20,000. What is other cost for manufacturing this 12,000 units? Is more 1,20,000. Overhead, electricity, workers cost, other overheads cost is again 1,20,000. So per annum cost is 2,40,000. Which for how many units I am manufacturing? 12,000 units. So what is cost per unit? Is nothing but 2,40,000 divided by 20, which was the same cost for even WIP, which is 20 rupees. Now understand, this finished goods will not be immediately sold in the market. It will require time to sell this finished goods in the market. So still, we have purchased raw material, we have manufactured finished goods, but there is no hint of cash flow coming back. So still money will be required with me. If I don't have money, I will not able to carry this finished goods. So because I have already incurred 2,40,000, this is in terms of per annum, I need to convert it. My finished goods normally remain in stock for 1.5 months. So again, there will be no cash inflow for 1.5 months more. We already calculate raw material carrying requirement and working capital carrying requirement, right? So in finished goods, the cash inflow is not happening. It will be required to carry for 1.5 months. How many units? Again, I am assuming 12,000 units, right? So, my total cost of 2,40,000 still will require 1.5 months divided by 12, which is rupees 30,000. You will say me, sir, we have already manufactured the finished goods. Now we are waiting to be sold. We are not incurring any additional electricity expense, additional work expense. Believe me, you are incurring. Say this 1.5 months passes. Will you have to purchase raw material? Yes. Your requirement of 1.5 months should be satisfied. Out of this 1,20,000 rupees, you will require more raw material for this 1.5 months. Your manufacturing process is continuous. So even this cost will be required for this 1.5 months. Every process is going simultaneously. It is not one by one. Whenever raw material is in stock, there will be WIP in process. There will be finished goods lying in your godown. There will be your debtors. So this all is cycle. So if you want to wait 1.5 months, you cannot just sit and wait for 1.5 months. So this cost will start in, see what you are doing? 1.5 divided by 12 into 1.5 divided by 12. So your raw material cost will incur for next 1.5 months. You will not be getting any cash inflow. Your overhead cost will also incur by 1.5 months. You will not be getting additional cash flow. So this is rupees 30,000. What is this? I'll tell you. 12,000 units multiplied by 1.5 divided by 12 multiplied by 20. This answer is also rupees 30,000. But what is a 12,000 units into 1.5 divided by 12? The answer will be in units, right? If I do only this multiplication, what will be my answer is 12,012. It is 1,500. Believe me, what is this? Is average stock of finished goods. Sir, how it is average stock of finished goods? If you manufacture 12,000 units per annum and 1.5 months is your average finished goods stock, means 1.5 months of production will be in your stock. What will be 1.5 months production is 1,500 units. Multiply it with 20, you will be getting rupees 30,000. Believe me, this is also average stock of finished goods. Just the answer is in rupees. So many a times bankers directly take this figure from balance sheet asset side. What is your finished goods stock? Is your finished goods requirement? Are they correct? The answer is yes. because that figure and this figure will be normally same. That requirement is exactly found out on 31st of March, because in balance sheet you get figures as on 31st of March. So what we can do is also this. Average stock of finished goods multiplied by cost per unit. I will be getting working capital finished goods requirement in rupees. And how much is our answer? 30,000. Try to understand this. Our finished goods requirement is 30,000 rupees and it is for 1.5 months. So please try to understand what we are doing. We have started a business, purchased the raw material, invested rupees 30,000. When it is going to come back? Never. Invested again 40,000 and we have started manufacturing. When it is going to come back? Never. Because it will be in cycle. I have invested 30,000 rupees to store my finished goods. What will be my what will be my requirement? Rupees 30,000. When it will come back? Never. And this is how I find out my finished goods requirement. So if total cost of manufacturing is given, I can find out my finished goods. If directly finished goods stock in rupees is given, I can take it as requirement, or I can find it out in this manner. Let us go to next one. I have stored my finished goods for 1.5 months and now it is ultimately sold. So will I be getting my money back? Finally, yes. The answer is no. I still don't get my money back if I have sold this goods on credit. It will result into debtors which pay us in 2.5 months. Debtors pay us in 2.5 months. So still money is not coming in. Still we are waiting when the money will be coming back to us. It will come back after 2.5 months more. Please understand. I am already having a per annum cost of rupees 2,40,000. This is per annum cost, right? It is raw material plus factory cost. And all of you understand, right? Why still I am calculating that raw material cost? Because that raw material, whatever money I am investing in first month, in next 2 months, in next 1.5 months, in this 2.5 months, I will have to purchase raw material continuously as per my requirement. And so I need to calculate that raw material requirement even in this figure. There will be other cost which will be incurred, which is say 20,000. This is a 2,60,000 and there is a profit of 40,000. Let me change the figure. This is 12,000. And so this will be 2,52,000. This is 48,000. So total will be 3 lakhs rupees. So total sales will be 3 lakhs rupees. Other cost including marketing expense. This is cost of goods sold. This is selling expense. Those who have done costing might be knowing this. Cost of sales plus profit is equal to sales. So my sales is 3 lakh rupees. But I have sold this goods on credit. This is per annum. Please understand, 3 lakhs rupees is per annum. Is for 12 months. What will be sales for 2.5 months? Which is 3 lakhs into 2.5 months divided by 12. Which is 62,500 rupees. Please understand how this has come. Still, I am manufacturing how many units? 12,000 units. So I am assuming I am selling everything. 12,000 units. 12,000 divided by 3 lakhs divided by 12,000. So it is 25 rupees. See, raw material cost was 10 rupees. Again, we added 10 rupees more in manufacturing. Again, we are adding 5 rupees more. And so cost per unit is coming to be, this is not even cost per unit. This is selling price per unit. In which profit per unit is rupees 4. So our cost sheet goes like raw material 10, other cost 10, selling expenses 1 per unit. This is the 21 rupees plus profit of 4 rupees. So total is 25 rupees. Per unit is selling price and cost per unit is 21, including selling cost. What is 62,500? To carry my finished goods? No. To carry my sales for 2.5 months. Because I am not going to receive money till 2.5 months. See, in this 2.5 months, I will have to purchase raw material worth 2.5 months. I will have to do manufacturing. I will have to do selling expenditure. Everywhere there will be cash outflow, but still there is no cash inflow. So I will have to have money for that, which is nothing but working capital requirement. And 62,500 for this 2.5 months I'll require for debtors. How I have found out is this: 12,000 units into 25 rupees. That's the selling price per unit. Multiplied by 1.5 divided by 12. Sorry, 2.5 divided by 12. I have done the same thing. 12,000 into 25 will be 3 lakhs. Let me verify. 12,000 into 25 is 3 lakhs. This is nothing but total sales. Unit multiplied by selling price per unit will be total sales into 2.5 divided by 12. What is 12,000 units? Units sold into 2.5 is credit period divided by total period multiplied by selling price per unit. I will be getting debtors, believe me, in rupees. How? Please understand. Rupees 3 lakhs is a sales per annum. What is the sales for 2.5 months? Is we have found out rupees 62,500. Believe me, this is nothing but answer of debtors. You go to my business at any point of time, 2.5 months debtors will be there. Out of total sales, 2.5 months debtors will always be there. How understand? Suppose I have sold goods in January. Money will be received up till 31st Jan? No. Money will be received up till 28th Feb? No. Money will be received on 15th of March. So if you see on 15th of March, which all sales will be pending? This sales will be pending, it will not be received. This is recoverable, not received. This is recoverable, not received. Sir, what about this? This will be received already, somewhere over here. I am talking about what is outstanding as on 15th March. Believe me, it will be outstanding for 2.5 months only. What will be outstanding as on 31st March? Believe me, all sales of March, all sales of Feb, and 15 days sales of Jan. This will be outstanding. Sir, what about the sales which was done on 1st January? That will be recovered on 15th of March, which will be no longer outstanding as on 31st of March. So, this 62,500 is a sales of 2.5 months and is going to remain debtors throughout my life. I am never going to receive this money back. If I want to sell goods on credit, I will have to keep invested 62,500 rupees in my business, which will never come back. Sir, if I increase the sales, then my working capital requirement will increase. Why? I am giving money on credit. Something is receivable right now. I am postponing it for 2.5 months. This is nothing but working capital requirement for debtors. Please understand, we have found out by this method, unit sold into credit period divided by total period multiplied by selling price per unit is debtors in rupees, and ultimately it is working capital requirement. The point is this. Sir, why I have taken this rupees 4? This is my profit. I should not take into consideration profit as my money required, because this is not my cash outflow. Agreed. See, right now what I am talking, I have not got my money back. And what will be my outflows? This 12,000 will be my outflow. This will be my outflow. But this is not my outflow. This is a profit which I am going to earn when I sell my goods and when I receive the money. So there is no cash outflow happening in this 48,000. So only, instead of a selling price per unit, what is suggested? You should take cost of sales per unit. You should not take selling price per unit, but you should take cost of goods sold. That is nothing but COGS. So whenever you find out working capital requirement for debtors, there are practically two approaches based upon sales, based upon cost. Here what you will be taking? Sales or selling price per unit, if you are to multiply per unit. Based upon cost, what you will be taking? Cost of goods sold or COGS per unit. Which is a good approach? This approach is a good approach. In debtors management, you should take cost, because that is your cash outflow which is invested in your business. Bank will never give loan for this. Some bank gives, but normally bank will find out working capital requirement. You should find out working capital requirement based upon your cost and not based upon your cost plus profit. See, when we'll be doing debtors management, again we'll be converting this into two parts. One is variable cost, another is the total cost. So which cost should be considered? We should not consider fixed cost, because for fixed cost, there is a long-term requirement and not working capital requirement. And so it is divided into variable cost, total cost. When we'll be doing working capital management, debtors management, at that time we are going to do it in detail. But right now, understand, I'm just giving you an overview of how to find out working capital requirement. So our working capital requirement is 62,500 and it is for 2.5 months. $62,500, which is for 2.5 months. Alright, prepaid expenses, I am taking it as 0. In both the cases, I am taking it as 0. Cash and bank, try to understand. My company requires 10,000 rupees at every point of time as cash balance. See, if you will go to a company, if you go to a business, if you go to a provision store, if you go to a mall, believe me, their cash box will never be 0. There will be 5,000, 10,000 rupees required in the business. So what is our requirement in our case? 10,000 rupees. When this will come out of my business, please understand. This will remain 10,000 tomorrow. If it has become 20,000, I will withdraw 10,000. But ultimately, this will never come out of my business. This will come out of my business when I close this business. This is also a working capital requirement. If I want to do this business, I will have to keep permanently 10,000 rupees in my cash box, which is nothing but amount invested. I'm not going to get return on it. Those are going to be in my cash box throughout the business life. And so this 10,000 rupees also comes in your working capital requirement. As far as days and months are concerned, I'll not be taking anything, so I'll be taking 0. So what is my permanent working capital requirement if I manufacture same level of units, that is 12,000 units? It is 1,52,500. Why? 10,000 will require for carrying of raw material stock. To manufacture the goods, I will require 40,000 more. Finished goods 30,000 more, data 62,500 more, and cash and bank 10,000 more, and I'll require 1,52,500 rupees as my working capital requirement. To start my business, I will need this money. Sir, then I am going to receive this money back. Sir, then this is a raw material requirement for 7 months. This is working capital requirement for 7 months? No, this is not a working capital requirement for 7 months. After 7 months also same cycle will be repeated. If the same cycle is repeated, this is a continuous process. So I will never be getting this money back. Yes, I am getting it back, but again I am reinvesting. See what is happening? I am investing 152,500 for 7 months. Again I will receive this money back. Again I will have to do manufacturing, so again it will go out, again it will come back because I am selling my goods along with profit. Again it will go out because I'll have to purchase raw material, I'll have to start manufacturing. This is a cycle, this is a continuous process. So this money is never recovered. So if you want to find out your working capital requirement, how much money is required to run your day-to-day business, your working capital requirement is 1,52,500. Never speak it is for 7 months. It is not for 7 months, believe me. It is permanent requirement of your working capital. So then why you have written 7 months? That I'll tell you. Try to concentrate. We are going to reduction of working capital requirement. Please understand, total credit purchase in a year is say 1,20,000. You pay to creditors after 1 month because they allow you 1 month period. So what will be your creditors amount into 1 divided by 12? So please understand, this should be understood by every person. If 1,20,000 is credit purchase per annum and creditors give you 1 month credit, then your creditors figure will be 10,000 rupees. At any point of time in your business, your 1 month payment will be outstanding. Say I'm taking January, February, March and April. If you see as on 31st of Jan, which payment will be outstanding? Full January payment will be outstanding. Sir, what about a December payment? They will be already paid in January and will not be outstanding as on 31st Jan. 28th Feb, full February will be outstanding. On 28th Feb, all the things of January will already be paid. For as on 31st March, March purchase will be outstanding. February purchase will be paid in March, during March. January purchase will be paid in February. So as on 31st March, only 1 month purchase will be outstanding. As on any date of the year, 1 month purchase will be outstanding. If 1,20,000 is per annum, what is 1 month purchase? It is into 1 divided by 12. Credit purchase into credit period divided by total period. I will be getting answer of creditors will be rupees 10,000. What is the 10,000? Try to understand. This is working capital requirement. No. This 10,000 rupees is having a reverse situation. See, what is working capital requirement? There is a cash outflow, but there is no cash inflow. So cash outflow is immediate, but cash inflow is on later stage. See, if I am doing cash outflow today and I am getting cash inflow today, believe me, there is no working capital requirement. Working capital requirement will not be there if the payment is received immediately. If you are not carrying your stock, if you are not carrying your WIP, if you are not carrying your finished goods, if you are purchasing today, immediately selling it, then there will be no working capital requirement. If there is a cash outflow which is immediate, but cash inflow which is not immediate, then there is a working capital requirement. Here there is a reverse situation. Your cash outflow is delayed, and if your cash outflow is delayed, it will be reduction in working capital requirement. So only creditors of this 1 month, 10,000 rupees of this 1 month, I will be reducing it from working capital requirement. I am reducing this 10,000 rupees, which is for how many months? Outstanding expenses, I am taking right now 0. We will be doing it, but right now we are taking it as 0. What is our total working capital requirement? Is 1,42,500. Why? It was 1,52,500. But understand, 10,000 cash outflow. So only I have taken this figures I have seen. 10,000 rupees cash outflow for purchase of raw material. You will be keeping in stock for the period of 1 month, but you need to even pay after 1 month. So this 10,000 will be reduced as your working capital requirement, and you will no longer require this 10,000 as working capital requirement. Right? So you are delaying by 1 month. So your cash outflow does not happen today. What was your total time period? 7 months. But your cash outflow does not happen today. It happens after 1 month. So what will be your working capital cycle? Will be only 6 months. How to find out working capital cycle? This plus this in terms of month is a 6, which is nothing but working capital cycle of 6 months. Even what does this mean? Working capital cycle of 6 months. What does this mean is my cash outflow, if it happens today, of course it is happening after 1 month, but let us assume after 1 month is today, then I will get my money back in how many months? 6 months, which is nothing but my working capital cycle. This is how I find out working capital requirement. I need to start this manufacturing of pen business. What is my working capital requirement? 1,42,500. Calculated in a logical manner is my working capital requirement. I might require something more, something less. Sometimes I need to pay 2 days early. Sometimes I will receive 5 days late. I will be requiring some contingencies, and so I take 7,500 more as contingencies. And so my working capital requirement is rupees 1,50,000. Go to a bank. Tell them, give us a overdraft or a CC limit of 1,50,000 rupees as my working capital requirement. They'll ask you, well, how 1,50,000? You can show the calculation. This is how I have calculated my working capital requirement of 1,50,000. At any point of time, I require 1,50,000 in my bank balance so that I can use it. Sir, when you will be repaying this back? When you will be getting this money back? Never. So only overdraft and CC limit are renewed every year. Every year you will require working capital requirement. Always bank will say this, you take out the 20,000 rupees as margin money. We will give you a overdraft limit or CC limit of only 1,30,000 rupees. So they will not give you whole 1,50,000. You are doing your business. Even if you go to take a car, go to take a home loan, go to take a mobile, in installment, they will ask you margin money. This is the reason they will ask 20,000 rupees you take out, and 1,30,000 rupees we are creating overdraft limit or CC limit. See, what are this overdraft and CC limit? You take the money, you will be charged interest. You can pay back any portion of money. Say you have withdrawn 1,30,000 rupees from your overdraft. Now you can repay back 10,000 rupees. So now interest will be charged on 1,20,000 rupees only. Again, you can withdraw 10,000, interest will be charged on 1,30,000. Again, you can repay 20,000, interest will be charged on 1,10,000. So whatever you are using, the interest will be charged on that amount. This is how we find out working capital requirement and we present it to bank. Still, bank will not give us full money. But if someone asks you what is your working capital requirement, you can show this and tell them that it includes a contingencies of 7,500. Basic questions in working capital management are of working capital requirements. Let us then go to next point, which will be cash budget. A very simple point to be solved in this particular chapter is cash budget. Currently, we are in month of say December. Next will be January, February and March month. We want to find out what will be my cash position in next month, which is January, next to next month, which is February, and next to next month, which is March. How I find out cash requirement? I will be first taking opening balance. I am talking right now only about January. I will add all cash inflows. I will deduct cash outflows. I will be getting closing balance, which will become opening balance of Feb. I will again add cash inflows, again deduct cash outflows. I'll be getting closing balance. Again, I'll take it as a opening balance of March. Cash inflows minus cash outflows, I'll be getting closing balance, and I can easily give you cash position which is forecasted. These are not actual figures, and so only this is termed as budget. Figures which are forecasted are nothing but budget, and we are going to see whether our cash position will be good, will not be good in this particular situation. Try to concentrate. I am going to first. In Jan, say my opening balance is 10,000 rupees. What are cash inflows? Sales. See my sales in December, Jan, Feb and March. There are two types of sales in my business: cash and credit. What is cash sales in December? 50,000. Credit sales in December? 60,000. Cash sales in Jan? 40,000. Credit again 60,000. Let me take a separate figure. 70,000. In Feb 30,000. And in Feb is 45,000 as far as credit sales is concerned. March 20,000 and sales has reduced to 10,000. Sure. What is the total sales? 1,10,000. 1,10,000. 75,000. 30,000. Should I write down this 1,10,000 as cash inflow in Jan? The answer is no. Credit sales is not your immediate cash flow. You are right now preparing cash budget. You are not preparing profit and loss account. Whatever cash is coming in, you should consider. This should be your focus, cash flow. Whatever cash flow is coming in, you should consider. Whatever cash flow is going out, you should consider. Except that you should not consider anything. So, sir, how to calculate what will be cash flow of Jan? First, in Jan, there is cash sales of 40,000, which is your cash inflow? Yes. So you can write down 40,000 as your cash inflow in Jan. Sir, what about credit sales? Please understand this 60,000 credit sales of December. What is the debtors period? 1 month. So this 60,000 will be realized in Jan. This 70,000 will be realized in Feb. This 45,000 will be realized in March. So as far as cash flow is concerned, in January, I will be realizing 60,000 rupees from debtors. They are not credit sales. See what I should write down. Realization from debtors. How much will be realized in the month of Jan? 60,000 rupees. So I am not writing credit sales of December. Sorry, Jan. I am writing credit sales of December. I have sold 60,000 worth rupees goods on credit in December, which will be recovered in January during the month. And so I am writing down cash inflow in January. Similarly, Feb. What is my cash sales? 30,000. That I can directly write it down. But now January sales will be realized in Feb. So in Feb, which credit sales will be realized is of January, which is of 70,000. Again for March, cash 20,000. But credit sales I will realize from debtors which was sold in February. So 45,000 will be written over. They are cash inflows. This is cash sales. This is realized from debtors. They are cash inflows. So I'll be adding it down. Cash outflows. So please try to understand. Same thing will happen for purchase. And let me assume, for making it easy right now, my purchase are only cash purchase. Sir, if they are credit purchase, then the same logic of sales can be used. So what are purchases? So purchases, cash purchase in Jan is 10,000, 20,000 in Feb, and 40,000 in March. They all are cash purchases. There are no credit purchases. All right. Let us go to wages. What is the time lag in payment of wages? Please understand. Wages we pay after 2 months. What are wages of November? 10,000, December 20,000, January 30,000, February 40,000 and March 50,000. We are going to present budget only of Jan, Feb and March. But please understand the time lag in payment of wages is 2 months. So you pay November's salary in Jan. You will pay December's salary in Feb and you will pay Jan's salary in March. So in Jan, which salary or wages you will pay? Of Jan? No. In Jan, you will pay salary or wages of November, which is 10,000. In Feb, you will pay salary or wages of December, which are 20,000. And in March, you pay salary or wages of Jan, which are 30,000, which is 30,000. So the lag will be given, everything will be given. Depreciation for the month of Jan is 5,000 minus depreciation. No. Depreciation is non-cash. We should not consider it. I have purchased the machinery in cash in the month of Feb. In the month of Feb, I have purchased cash machinery of 50,000 rupees. So I will have to pay 50,000 rupees. Sir, it is not my expenditure. It is capital expenditure. Whatever is your expenditure, you should think about cash. I have purchased machinery in cash. I will be purchasing machinery in cash. I will have a cash outflow of 50,000. All the cash outflows will be written over here. Opening, cash inflow, minus cash outflow. I will be getting closing balance, which I will be taking as opening in next month. Again, cash inflow added, cash outflow subtracted. I will be getting closing balance, which will become opening balance of next month. Again, cash inflow minus cash outflow, closing balance of the month of March. This presentation of budget to higher level management is nothing but presentation of cash budget. This is how we do cash budgeting questions. Again, I will be sending you recorded lectures of cash budget that we are not going to solve in the classroom, but you will be having recorded lecture of cash budget, and it will be a very easy point to be solved. Next will be debtors management. What is a debtors management? Please try to concentrate. I have told you working capital management includes management of current assets and current liabilities. What is included in current assets are debtors. You just need to decide in debtors management whether you should increase the credit period or whether you should keep or decrease credit period. So if you decrease your credit period, what are your losses? What are your benefits? If you increase your credit period, what are your losses? What are your benefits? Let me go to, if I increase my credit period, what are my losses? My investment in debtors will increase. So if I am borrowing loan from a bank, my interest on debtors will increase. We are finding out debtors in this manner. Let me go back and tell you how we have found out the debtors. Instead of 2.5 months, say it was 6 months. My investment in debtors will increase. I will have to take more loan. So I will incur more interest, and that interest cost on increased debtors will be my loss. So I have written interest on increased debtors. My bad debts would increase and my collection cost would increase. What are the benefits if I increase my credit period? My sales will increase. Believe me, increase in sales is never a benefit. Say I am manufacturing this pen at 10 rupees and I am selling it at 9 rupees. I am making a loss-making business per unit of sale of this pen. If I sell 1 crore pen, my loss will be 1 crore rupees. If I sell only 50 lakhs pen, my loss will be only 50 lakhs rupees. In this scenario, less sales is better. So increase in sales is not always your benefit. Try to understand, I'm writing it perfectly. Increase in profit because of increase in sales is nothing but my benefit. Please understand, I am going into decrease of credit period. Decreasing of credit period, believe me, we don't have to see the losses. Benefit of increase in credit period will become losses of decrease in credit period. Benefits of a decrease in credit period will be nothing but losses of increase in credit period. What are benefits if you decrease your credit period? Your investment in debtors will be less. So interest on debtors will be less. Your bad debt will reduce. Your recovery cost will be reduced. Ultimately, this will be the benefits. How to decide what is the best credit period? Try to understand how we will solve this type of questions. What is best credit period? In one scenario, I am having 1 month credit period. In second scenario, I am having 2 months credit period. In third scenario, I am having 3 months credit period. I will start with my sales. Of course, if I give 3 months credit period, my sales will be higher. And here, my sales will be low. Minus, I deduct my variable cost. Of course, in 3 months, it will be higher because variable cost is directly dependent upon sales. I'll get contribution. Believe me, there is no need to deduct fixed cost. But even if you deduct it, it does not matter. 5,000, 5,000, 5,000. This all cost does not include any debtors related cost. So this cost does not include interest cost on debtors only. It does not include collection cost. It does not include bad debt cost. Sir, why fixed cost? If not deducted, it will be all right. Believe me, I'll explain you when we end the question. I am naming this as a relevant profit or profit before bad debt and interest and collection cost. I'll be getting the answer. What I need to reduce from this? Minus bad debt. Of course, it will be higher in 3 months. It will be lower in 1 month. Minus collection cost. Again, it will be higher in 3 months. It will be lower in 1 month. Minus interest. Now, see, in our example, the working capital requirement was 1,50,000 rupees. I should not calculate interest on 1,50,000 rupees for this question. Right now, I am talking only about interest on debtors. We were having a debtors working capital requirement of 62,500. Then we should consider only interest on that particular debtors. Interest, this is not my total interest cost on even working capital. There might be interest on my term loan, long-term loan. There might be other interest. I am right now talking only about interest on debtors. I will reduce it and I will be getting answer of relevant profits. And what is relevant profit? Say it is 1 lakh over here, 1,20,000 rupees over here, and 92,000 rupees over here. I will select the answer that I should give 2 months credit period to my debtors, and hence I will earn a profit of 1,20,000. The answer is no. Should I select 2 months credit period? Yes. And my profit will be 1,20,000 rupees. The answer is no. This is not profit which you have found out from your P&L account. This is not the profit which is recorded profit or to be recorded profit. This is relevant profit. Only for comparison. Only for decision making. Don't use this profit somewhere else. Believe me, I'll give you one hint. Here we have taken interest of debtors only and not other interest. Interest for other working capital, right? Raw material, WIP requirement, interest on term loan, anything I have not taken that I need to pay, that will reduce my profit. But then, sir, what is 1,20,000? This is important for comparison with this and this. And once we take this decision, we will have to forget this profit. And so only I told you, if I don't consider this fixed cost, it is absolutely all right, because it will change my relevant profit, but it will not change my decision. Please try to understand. I am removing this 5,000 rupees from here. Mathematically, what will be my relevant profit now? 1,05,000. Because I am cancelling something which was subtracted of 5,000, my profit will increase by 5,000. What will be this profit? 1,25,000. What will be this profit? 97,000. Which is comparatively more? 1,25,000. What is my answer? 2 months. Will my answer change? No, because this is remaining same in all the cases. And so it might change the profit figure, which is important or not important? Not important. Why? It is relevant profit for decision making. Comparatively, only 2 months will be higher. Whether you consider that 5,000 fixed cost in all the cases, whether you do not consider 5,000 fixed cost in all the cases. So only I have not considered interest on term loan. Try to understand why. Whether you give credit period of 1 month to your debtors, 2 months to your debtor, 3 months to your debtors, your interest on term loan is going to remain same. It is fixed cost, which is irrelevant. Don't speak this, huh? They are relevant. You will have to pay it, but they are irrelevant for decision making. They are not important for making decisions. They are irrelevant for your decision making. So this type of profits are only relevant profit only for decision making. Once you take the decision, compare it. Once you take the decision, the figures are useless. They are not actual profit. They are not recorded profit. They are not the profit which you are going to earn. They are not variable profit. They are relevant profit only for decision making purpose, whether your credit period should be 1 month, 2 months or 3 months. This is how we will be taking our debtors decision or debtors management.